Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 185 on 23rd of February. Again, a very volatile day where markets opened with a nice gap up but could not sustain the gains and gave back all the gains. Most sectors were unaffected from close to close, but real estate, led by DLF, was up at 3.2%, and there was some buying in the PSU bank space as well. Other than that, most sectors were pretty much flat for the day. We have still not come out of this current drop with any meaningful gain. We are still sort of hovering around those lows of 16,800, 17,000 range, and 16,800 has been, that support has been tested many times, like 4 or 5 times. So there is a potential that in case there is further global weakness that comes around, we may break that in the coming days. So that is a sort of the major risk that faces the market as of now, and once that breaks, then another 2-3 percentage points will be gone in no time. The good part today was that small caps were in a bounce mode. Nifty Next 50 was up 0.8%, small caps up 1.2%, mid and small caps were up 0.6%. Nifty, however, stayed flat. In line with these trends, MI25, MI35, MI20, MI50, all which have small caps and mid cap flavor. MI25 and 35 have only small caps. MI20 and 50 have small and mid caps, were all up between 1.5 to 2.5%. NNF10, which is made up of Nifty Next 50 stocks, was up 1.5%, and others were not so conclusive. So some of these strategies have recovered the losses of the last week. Some have yet to go some more further, but pretty much there is sort of a wait and watch that is happening in the market as to what will be the next move. It is not sure that we are bottoming out here in this particular down leg. In terms of top gainers and losers, as we are seeing in the last 3 days, Dhani is continuously falling 20% on 2 days, and today 10% again. So there seems to be some major fallout there. Rajesh Exports, Bajaj Electric, Chalet, and Kajaria Ceramics were some of the other losers. And LGO Equipment, Gujarat Ambuja Exports, Sharda Crop, we hold this in several portfolios, up 8%. Raymond was up 10.7%, again back of the real estate sector move. And PNC Infra also moved up 11.4%. These are all stocks from within the CNX 500 universe. A very important and I would say insight that came around today from the Twitter account of Holger was that just see how Russia has reduced its dollar denominated debt from a level of 160-170 billion dollars to almost 3.9 billion dollars. So virtually Russia is not dependent upon the US debt market, the US treasuries it owns, and hence sanctions from Russia on Russia don't really matter too much to the Russian exchequer. So from this perspective, one can say that the sort of warnings or tactical placement of the threats from the US and Western world, that I think the Russians may not really pay too much heed to that, because they have isolated and secured themselves from dollar sanctions, and pretty much moved their reserves into gold. So Russia has been one of the major economies where they have been accumulating gold in a very big way, along with China. India also has been accumulating in some ways. So I think in times to come, most emerging markets are going in that trend. And why just the central governments? Even people like you and me should be taking heed to this. Why central banks are hoarding gold? Why they are increasing gold? Because this is the only hedge that is available against the crazy amount of money being printed out there. And the Russian debt to GDP also is very, very comfortable, around 18% versus 130 odd percent for the US. So from all this perspective, this is just a sort of a side perspective to tell you about what's happening in the Russia and the US markets. Another perspective that I wanted to share with you was about this chart that I shared on Twitter today. So this is Nifty 50 index over a span of almost 2 decades, and we can see that every few years, let's say 2000 to 2003, then 2008 to 2009, then 2010 to 2013, then about 2015 to 16, then 2020, we have got good consolidation or corrections in the market, where the market allows you to sort of take a relook at your strategy, accumulate your favorite stocks, re-strategize, sort of prepare for the next move up, because all these larger time frames you can see, they're all moving up into all-time highs, etc. So market gives you good opportunity every few years to sort of rejig and reevaluate and sort of rebalance your portfolios. And who knows, maybe this trend that has started on a consolidation basis may extend further, and we may get a year of consolidation. This is always possible. Don't consider that this can keep going through the roof to the sky. That will never happen. So let's keep our expectations realistic and use this opportunity, whatever we get out of this in the next 6 to 9 months, in case we do go here, to rebuild and repair some of our portfolios. Another perspective was on the stock Butterfly, which we covered a few days back. So today the confirmation was there that the company is being bought out by Crompton Consumer, and 55% stake is going away at 1400 rupees. Stock is also near 1400 rupees. Market should have moved up beyond this, but it is still consolidating at 1400. Open offer is at 1433. So what we can say is that these kind of acquisitions, etc., don't happen overnight. It takes a long gestation period for these investment bankers to find a suitable buyer and go through the negotiation and go through due diligence. So you can see very easily that it has been going up and up and up in this entire last 1 year. So somewhere these insiders know what is coming, what is the valuation, where the deal is likely to happen. So as we keep saying, bhav bhagwan che. So the price usually will tell you what's happening much ahead of this action. And if you read the news and then act upon it, there is no premium left actually, because everything has been discounted already. So my suggestion to all viewers who would follow price trends is to allow, even if you are following fundamentals of a company, allow the price trends also to align with your fundamental view, and then take a call on this. Another insight was on NNF10 today, where we have showcased how this strategy over 1 year, over 3 years, over 5 years and over 10 years have consistently beaten the Nifty Next 50 benchmark, based on which it selects 10 stocks on a monthly rotation basis. So this is something that you can look at in case you don't have this strategy. This is a very good strategy, very mature strategy that a lot of users are using at Weekend Investing. So thank you so much for watching this daily bite, and I'll see you in another video soon. Bye.